Hi, Eric here from 5minuteinvesting.com. And today we're going to talk about Bollinger Band. Now, Bollinger Band is a really popular indicator, but before we start, it's very important to keep the big picture in mind. So, when you're investing, there are only 3 steps. Find a great company, buy it at a discount, and multiply your profits using stock options. That's all there is to it, and you can use this model on any investments. So back to Bollinger Band. So right now we're at the 3rd video of this series. And this series mainly focuses on technical analysis. And Bollinger Band is our first technical indicator. It mainly used to identify tops and bottoms. And that's it. Now a lot of people like to use it to identify if there's an increase in volatility, which is what the Bollinger Band is calculating. Volatility is how much does the price move within a given period of time. So let's say if I have a Bollinger Band of 20, then I'm looking at the last 20 days, how much does the price move? And then it has a second parameter called standard deviation. And it means that the Bollinger Band will calculate the top and the bottom where the price moves within like 90% of the time. So 90% of the time, price will be within these 2 ranges. And that's very important. So now most people can easily use Bollinger Band because when it touches the lower band is a low, and when it touches the higher band is a high. And that's it. It's not really complicated. What's important though is to know when not to use a Bollinger Band. Just like all the other investment techniques I'm going to teach you in the later videos, it's important to know what not to do. So, having said that, when you look at a Bollinger Band, there are 3 phases. First, the easiest, you'll see that the Bollinger Bands are flat. Now, flat means price is ranging, there's nothing really new happening, so when the price hits the low point of the Bollinger Band, chances are it's going to rebound upward. Simple, right? Now the second one is when the Bollinger Band is contracting. Now notice I didn't say expanding because I want to cover contracting first. Now contracting is after Bollinger Band had a big move. Let's say price went from $10 to $20 after some news release, and then the volatility or this news is dying down. So then the Bollinger Band will contract because the volatility is decreasing and it becomes stable. So then you have a horizontal Bollinger Band. Now at this point, the high and the low predicted by the Bollinger Band is still fairly accurate. The only not accurate one, which is the last one, is when the Bollinger Band is expanding. So when a Bollinger Band is expanding, it means there's some new information that is propelling the price to go upward or downward. And that means at this point, you want to do your research. You want to know why price is having such a significant move. Because the Bollinger Band is no longer reliable once it is expanding. Because it cannot help you to predict the top and the bottom anymore. So the tricky part is, when does a Bollinger Band goes from stable, which is reliable in predicting tops and bottoms, versus expanding, which is not reliable in predicting tops and bottoms. And that comes down to research. Fundamental research, news research, insider activity that we'll cover in a later post. And that's the basics of Bollinger Band. So going back to our initial question, investing is about knowing what not to do. So for when you're using Bollinger Band, what you're not supposed to do is to try to guess the top when the Bollinger Band is expanding. You should wait until it contracts, and so then you can find the bottom using Bollinger Band. And we'll cover more of that in the next video.